Hi guys, a very good afternoon. So, in this specific video, we will be trying to solve the problem of picking deficiencies or spotting deficiencies, right? So, when we do questions in our AA exam, many times you're asked to spot deficiencies. And many of you are struggling to spot the deficiencies. And in this specific video, I will be giving you some tips as to some tips which you can use to be able to spot deficiencies faster and easier. And we will also be looking at some questions. Okay. So, guys, let's forget deficiencies for now, for the time being. And let's just look at an example where you are a doctor. Now, when you are a doctor, you know in general that some things are problematic. Like you don't even need to be a doctor actually. But say, suppose somebody comes to you with constant cough. You know that it's a problem, correct? You don't even need to be a doctor to say that. Somebody who comes to you and says that I have a very bad headache. You know that this is a problem. I'm not able to sleep at night. This is a problem. Okay. I have problems with my, if I walk too much, I get shortness of breath, right? So, I'm just giving you some examples here. When somebody comes to you and tells you these things, you know in general that these are problems, correct? Same way, when some information is given to you about a company, is given to you about a company, you should know in general what are problems, in the sense that just like how you knew here that in general constant cough is a problem, you should know that in general if a company does not have segregation of duties, again we've done all this in class, right? We're just doing questions, we're just trying to solve exam type questions, so you should know what is segregation of duties and all, right? But if a company gives some information and that information makes it clear that there is no segregation of duties, it's obvious that this is a problem or this is a deficiency. For example, the internal audit function or the internal audit department does not have enough people or does not have qualified people. Okay, the internal audit department is understaffed. It means that we have less people, but we have more work that needs to be done. So that's also a problem. So if there's any question that comes to you, any company that comes to you and says, oh, my internal audit department is understaffed, that could be a problem. Just like how in this example, when you were a doctor, if a patient came to you and told, oh, I have very bad headache, it indicates it's a problem. 4 o'clock. Same way, if a company comes to you and says, oh, my internal audit department is understaffed, it should indicate a problem to you. no authorization by senior staff, in the sense that I am a clerk in company A. And on behalf of the company, I can just buy things on my own. I don't have to get it authorized by a manager. I can just order anything on behalf of the company. Again, we've done AA entirely, and you should know now that this is a problem. There needs to be authorization by senior staff, right? Maybe in case of purchase, or maybe say, for example, I want to use petty cash. So again, I should not be able to just go open the drawer and take cash out as a clerk. I should get it approved and authorized by a senior staff, and it needs to be documented. The reason why I took the cash must be documented. And if you see a company where that's not happening, again, there's a problem or there's a deficiency. So when you're spotting deficiencies, my advice will be to make a list of excuse me, general deficiencies. General. Maybe a list of, say, 10 deficiencies in general. And then you will see that when you see a company, many of those deficiencies might just be there. I will prove it to you by looking at a question as well. But making a list of general deficiencies or problems can help you pick out deficiencies in the question. Right? For example, as a doctor, again, you know that this is a problem. Okay. Now, since you know that this is a problem, if a patient comes to you and says, I have this issue, I mean, it can't get simpler. You just know that that's an issue, right? So if somebody comes to you and tells you that issue, it's easier for you to pick it out, right? Same way, if you have a general list of deficiencies and you know why those are deficiencies, it will help you pick those deficiencies out when they are mentioned in the question. What are some other examples? Clerk doing something. See, if you have a question, if there's a company you are auditing, and in that company, the clerk, for example, enters certain details and it's not checked by another person, again, that's a problem. Because again, the clerk may not have the expertise and the qualification to do it, thus increasing the risk of error. Right? So if you see in any company that a clerk is doing something and that's not checked, then again, that's an issue. Another common deficiency is credit limits are not regularly updated, in the sense that you sell something on credit. Okay, I sold a pen to you on credit. Now I know that, okay, Roshni is having credit worthiness, in the sense that she can pay for this pen on credit. She can pay later. I know because I've done a credit check. And then I say her credit limit is, I'm just giving you an example, 100 rupees. But the problem is, if I set her credit limit at 100 rupees and I'm not updating it regularly, is it necessary that Roshni's financial situation has to be the same? Yes, now she is having credit worthiness, but maybe, God forbid, she loses her job. Will she still have the credit worthiness? Is it still okay to keep a credit limit of $100 for her? Oh, of course not. So credit limits must be regularly updated because they may be out of date, or maybe the opposite may happen. Maybe now Roshni is earning very well, and now her credit worthiness also has increased. Now, if I still keep her credit limit at 100, I might lose business because she is somebody who can pay $400 later. So why should I just keep her limit at 100? Isn't it a good idea to increase her credit limit? Right? So again, credit limits must be updated regularly. If it's not updated, you see a question with information which says that credit limits are not regularly updated, then that's again a problem. Next, the company you are auditing does not regularly verify physical assets. Yes, on paper it says that we have inventory worth 10 lakhs. What do we sell? We sell food items. But again, you need to check if those food items are actually there or the people in the warehouse actually ate it or something. Or maybe, if it's something that can be spoiled, has it spoiled or is it still in good condition? If it's still good, right? That needs to happen. But if that's not happening, then that's a deficiency again. Okay. If you see a question where somebody is reviewing their own work, then that's a problem. For example, I am sitting in a warehouse. I am responsible for making sure none of the inventory is stolen or damaged or whatever. Now, if I am the one who is again counting that inventory, then that's a problem. What I mean is, say I am responsible for a chocolate shop. Now, if I am responsible for a chocolate shop, please excuse my drawing because I'm doing it with a cursor. So these are all the chocolates. This is me. I am in the warehouse. Now, if I am responsible for making sure that these chocolates are fine, and I am the one who is also counting the chocolates and telling the manager that there are those many chocolates, there's a danger that maybe, like at least in my case, I can say that there's a high chance I'll eat one of those chocolates. How many chocolates are left? 6. But what will I count and tell the manager? There are 7. So, I mean, if I am reviewing my own work, then I may cover up for any fraud or error that I made during the work. So if you ever see a question where somebody is doing self-review, then that's not good. You're not happy with it. Again, these are just some examples of problematic areas. We've done the entire AA. You have your exam in a few days. So you can add few more deficiencies to the general list of deficiencies. And you will see that if you're able to do that, if you're able to make a general list of deficiencies, and then you come across a company and you are asked to audit a company, you will be able to spot deficiencies faster and in an easier way. Okay. So let's look at an example. Where we are spotting deficiencies. Let's take a good question. Okay. This question was asked in one of the previous exams. Pomeranian, this company, has this information. Guys, whenever you're writing the exam, make sure that you read the requirement first. You can see the requirement here. And then you read the information, because the information is too much. And then there may be some information that you don't need. If you've read the requirement and then you're reading the information, you know which information is relevant to you and which information you don't need to bother about. So always read the requirement first. And part A is just saying describe the limitations of internal control. I mean, in general, you don't have to look at this information for that. So in general, whatever you've learned about internal controls and the limitations of internal controls, you just have to write them. Direct question. But part B says spot 8 deficiencies. So now let's read the information. I'm not reading this first paragraph, it's just an introduction. You can see under sales that all new customers of PICO are required to pass suitable credit checks. Upon passing the credit check, customers are set up in the customer master file and the credit limit is set by the sales director. That's a good thing. It's the credit limit is not set by a clerk. If the information said that credit limit is set by a clerk, you say, oh yes, there's a deficiency. But it's a good thing that it's the sales director who is setting the limit. So that's good, we are happy. The next line says the credit limits are only then changed when a customer requests an increase. This means that once the sales director sets the limit, that's it, that's the limit. And then if a credit limit needs to be changed, a customer must request it. If a customer does not request a credit limit change, then there will be no change in the credit limit. And that, guys, according to what I had explained, is a problem. In the sense that if I, for whatever reason, lose my credit worthiness, why will I go and tell it to the company and say, okay, lower my credit limit? And that's something that can happen. Customers may lose their credit worthiness, but their credit limit is still set at a higher amount. And that's what is happening here. The credit limits are not changed unless it's requested by a customer, which means that we are not regularly checking if the credit limits are continuing to be apt for that customer. And here we have a deficiency. The first deficiency is the credit limits are only then changed when a customer requests an increase. So that's your first deficiency. Now, again, as soon as you spot the deficiency, don't sit and start writing. Just spot them, mark them, make a small note of it. And once you've spotted all the deficiencies, then you start writing. So the first deficiency is the credit limits are not updated. Just make a small note of it and then continue reading. Don't start writing. Make sure you spot all the 8 deficiencies and then you start writing. I might help you in spotting maybe 5 or 6. Remaining, I would want you to spot. Let's read the next line. Orders are processed by the Pomeranian Post ordering department and goods are dispatched from one of the company's warehouses. No problem with that, I think. Sequentially numbered multi-part goods dispatch notes are completed and a copy is filed in the warehouse when the goods are dispatched. In the sense that when you're dispatching the goods, a goods dispatch note is sent along with those goods. I don't see any problem with that. Copies with the goods dispatch note are sent to the sales ordering department and the finance department on a weekly basis. In the sense that I'm assuming that we make sales on a daily basis. Right? I hope we make sales on a daily basis. But the goods dispatch note, along with what has been sold, is going to the accounts department once a week. I think there's a problem in that. Again, the problem is we are selling on a daily basis, but we are updating the finance department once a week. So there's a danger that we might miss out on a few sales, in the sense that we might miss out on recording for a few sales because we're sending it once a week. So when we send it to the sales department, we have to send goods dispatch note for 1 week. And there's a danger that one invoice, one goods dispatch note from Monday might be missed out. So this is not a good idea. Updating the finance department on a daily basis when you're making sales on a daily basis is a better idea. So I see there's a problem here. And now this is a common sense problem. You should know that. In general, you might expect to make sales on a daily basis, but when you are updating it to the finance department on a weekly basis, then common sense, it's a problem. So that's my second deficiency. Again, if you feel, oh, this is a very good deficiency, or maybe you feel that, oh, after doing the exam kit, you feel that this deficiency is very commonly found in other companies, you can just make a note of that deficiency in your general list of deficiencies. So you can say it's a deficiency if finance department is not regularly updated regarding the sales. I mean, that's your choice. But I find the problem in that, so I'm just going to put it here. The deficiency is that goods dispatch notes are sent to the finance department only on a weekly basis, while we make sales on a daily basis. Okay, fine. Let's continue. Pomeranian Coast Credit Controller is currently on maternity leave for 6 months, and no one has taken over her duties, which means that the person who is following up with customers and telling them, okay, you have to pay us 100 rupees, okay, you have to pay us 2,000 rupees, okay, you owe us 5,000 rupees, that person is on leave. She's had a baby and she's on leave for 6 months. And for 6 months, nobody is following up with our customers. I see there's a problem. What do you guys think? For 6 months, nobody is following up. Nobody is doing credit control. Nobody is chasing customers. So I think that that's a deficiency. So I'm going to put it as a deficiency. Nobody has taken over the duties of the credit control. Again, we will word it later, but now we're just spotting the deficiencies. A clerk reconciles. Oh, clerk. Remember, I told you if a clerk is doing something, you have to be very careful. Let's see what he's doing. A clerk reconciles the trade receivables account to the list of individual customer balances, and the reconciliations are only reviewed by the financial controller if there are any unreconciled differences. Now, okay, for this, you need a general understanding of what the clerk is doing, in the sense that I hope that you've understood this sentence, because we've finished AA, we're just looking at some questions here. But this reconciliation done by a clerk is not reviewed by a financial controller unless some problem arises. There's a difference. There's a difference between the two accounts. Only then the financial controller is reviewing. What if there were some mistakes that could just balance off? I mean, I'm sure you've done this in FA as well, but I think there's a problem. Clerk reconcile. How many deficiencies have we spotted? 4. Okay, let's continue. An annual asset expenditure budget is set for each department within Pomeranian Group and is referred to blah, blah, blah. Okay. Board approval is required for any assets costing more than $500,000. Now, $500,000 is a big amount. Asset expenditure below this level can be authorized by the relevant head of department. See, remember I told you about authorization? Now again, we're talking about $500,000. So this means that if we have to purchase something of $400,000, we can purchase it without having it authorized by the senior staff. Again, $400,000. Now again, we don't have more details about the company as to how much business the company makes. But generally speaking, because we don't have more information, generally speaking, even $400,000 is big money. And here we are saying that somebody who, if suppose we need to purchase an asset, anything less than $500,000, we can purchase it without authorization by the board. I mean, I don't think that's a good idea. In the sense that anything, $100,000, we can just buy it without approval. $200,000, no problem. Right? Do the calculation, do the conversion and see how many rupees it is, but it's big money. Right? So again, this is a problem. Asset expenditure below 500,000 need not be authorized by the board. Right? Again, here we are making an assumption that $500,000, $400,000, $300,000 is material to the business, because there's no numbers given here. We don't know how much the business the company makes. Right? So we're just assuming that $500,000 is material, because in general, It is a big amount. And that's the problem. Anybody who's purchasing anything less than $500,000 worth of assets need not be authorized by the board. So again, how many deficiencies we have? 5. Okay, Pomeranian Co. has a head office in 5 factories. Okay, nice. The company has internal audit department, which is required in a 3-year cycle to carry out the comparison between all the assets. Blah, blah, blah. How many sites do we have? 11. I mean, we have non-current assets in 11 sites. The program of visits for the current year means that by the year end, IA will have completed this comparison at one of those sites out of 11 in 1 year. Remember, I told you that we need to physically inspect. Where did I write it? I remember I told it over here. The company does not regularly verify physical assets. But good news, this company is going to verify its physical assets. But the bad news is that in 1 year, they're only going to verify assets in one site when we have 11 sites. Okay, no problem. The company has given us 3 years' time to verify the assets in all the sites. But in 1 year, if we're going to one site, in 3 years, I'm assuming we'll go to 3 sites. We'll still not physically inspect assets in all the 11 sites, and that's a problem. That's another deficiency. We are still not physically inspecting assets in all the sites. Guys, in the exam, please don't write in these wordings. As I told you this, I'm just marking the deficiencies before doing it. I'm just helping you spot deficiencies. Okay, next. Pomeranian Co. maintains a perpetual inventory. We've learned what that is, in which finished goods and raw materials stored in the warehouse account, blah, 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 blah. Each of the 5 warehouse managers are responsible for supervising the inventory count at their site. Oh, remember the example I gave of self-review? That is, I am sitting in the warehouse, I am the manager of a warehouse, and I am counting how much inventory is there in that warehouse. I mean, why will I count it properly? If in the last 1 year I have been sitting and eating the chocolates in that warehouse, I know I have been sitting and eating the chocolates. So when I count it, I will count according to taking into consideration the fraud I did, and then I'll count, and then I'll say, yeah, all chocolates are there. That's a problem. The warehouse managers are the ones who are counting the inventory. So how many have we spotted? Okay. 7. Now the last one, I want you to spot yourself. There's still information there. Spot it yourself, right? So this is how you spot the deficiencies. Again, it's going to be really helpful if you maintain a general list of general deficiencies, basically, a list of general deficiencies. So if you see that deficiency in a question, you can just spot it easily, or a list of common deficiencies in companies. Okay. So how you word it and stuff, again, you've been given instructions how to do level 1 of the kit, level 2 of the kit. Here, I'm just helping you spot the deficiencies. Okay, so do level 1, do level 2, level 3, and make sure you're able to turn these spotted deficiencies into properly worded deficiencies. Don't word it like this in the exam. I am not going to do the wording as such because I mean that's something that you can just add on in the sense that you know what the deficiency is. Now you word it properly. I'm not doing that. So because we have limited time, let's move to another company and let's try to spot deficiencies in that company. Okay, guys. Again, Snowdon is another company. We are the auditors for Snowdon. Um, Again, the first thing they want to know is, I'm sorry, not the first thing, the last thing they want to know is the deficiencies. They want you to spot the deficiencies. And because we're doing deficiencies in this video, let's just focus on that because I got a lot of uh, emails from students saying deficiencies, substantive procedures, and test of controls. These are three areas that most of you have issues with. So today we'll do deficiencies. Tomorrow I'll make a video on substantive procedures. On Friday I'll make a video on test of controls. So right now there are other parts to this question, but I'm only going to help you spot deficiencies. Okay, let's read. You are the auditor, the supervisor for Snowdon. Okay, the company has a small internal audit department which has experienced significant staff shortage. Remember, I told you that if the audit department, the internal audit department, is understaffed, that's a problem because you may not have enough people to do all the work. So we've spotted the first deficiency. The first deficiency is that the internal audit department is understaffed. That's the first problem. Snowdon course training centers are either owned by the company or are held under a long-term lease. The company also has a head office and central warehouse for storage of training materials. Each training center is set up as a separate department and is given an annual asset expenditure budget. No problem so far. Expenditure budget, but some departments have already significantly exceeded their own. That's a problem. If there's a budget and then some departments have exceeded that budget, there is a deficiency. Right? So departments have exceeded their budget. When new equipment is acquired, the finance department classifies the expenditure between assets and expenses, noting the classification in the purchase order. The classification is made with reference to guidelines established by the finance director, who sample checks the expenditure allocation has been correctly applied. I think we are happy that it's the finance director who has set these guidelines, not some clerk. And we are happy that he is regularly checking if it has been applied correctly. No problem there. Part of the work which Snowdon Co's internal audit department is required to carry out is a comparison of the assets per the non-current asset register and those physically present in each of the center's warehouse. This year's program of visits has been planned and carried out on the same basis as previous years, means that by the year end, internal audit will have visited the 4 largest centers and 5 of the other centers randomly selected. How many centers do we have? We have 45 training centers, and in that we are going to verify assets only in 4. 4 or how many? 9. Out of 45, we are only going to go verify assets in 9 centers. This is a very big problem. We saw the same deficiency in the previous question. So you can put it in the common deficiency list. Physical verification of assets is happening in only 9 out of 45 centers. Again, I'm just helping you spot. You will have to word it. Payroll. Snowdown has a human resource department responsible for setting up all new joiners. Pre-printed joiners forms which require all necessary data are completed by HR for new employees, and once verified, a copy is sent to the payroll department so that the employees can be set up for payment. I think it's a good thing because the work is segregated. There is a segregation of duty. The HR gives the form, and once the form has been submitted, the payroll department then enters those details. So I think we are happy that that is happening. The joiners form includes the staff members assigned employee numbers, and the system requires the new joiners employee number to be entered before. Again, that's a good thing because there's a unique number to each staff. And I mean, there's no problem with this basically. All members of the payroll department can amend standing data in the payroll system as they have access to the password, which is changed by the payroll. This is an issue. Imagine all of you had access to your mark list that we are maintaining, and all of you can change it. That's a problem, right? It's a deficiency. So again, if you want, this is actually common. This is a common deficiency in many questions where data can be, the deficiency here is data can be amended by anyone. That's a very big problem. On a monthly basis, the employees are paid by bank transfer. I don't think there's any problem with that. The senior payroll manager reviews the list of bank payments and agrees this to the payroll records. If any discrepancies are noted, the senior payroll manager always makes adjustments. So no problem there because it's the manager who is doing it. He's doing it regularly. If there's any issue, he is correcting it also, no problem. After passing a credit card check, new customers are set up in the individual customer master file and a credit limit is set by the sales director. Now, again, there would be a deficiency if the credit limit is set by the clerk. But we are happy that it's set by the sales director. The credit limit then remains unchanged. Again, that's a problem. I explained why that's a problem, and we saw the same deficiency in the previous question as well. Credit limits should be regularly checked and updated. So again, that's the 5th deficiency. Are not regularly updated. How many deficiencies did the question ask for? 5. And we've spotted 5 deficiencies. There may be more. I stopped reading after this because I have spotted all the 5 deficiencies. Now you can go ahead, read the other 2 small paragraphs and see if there's any deficiency. But I'm stopping because they asked me to spot 5 deficiencies. I've spotted 5. So as you can see, guys, having a list of general deficiencies will definitely help you spot deficiencies. Let's try to see another question. Okay, let's look at chamomile. Now, chamomile is a question where you may not be able to spot the deficiencies so easily. It's a very good question because deficiencies, like in the previous question and the question before that, most of the time you are able to spot the deficiencies easily. But chamomile's deficiencies are sort of more tricky, and in almost every sitting, people have a problem with chamomile. In September, December, June, March, in every sitting they have a problem. In every batch, there's somebody who has a problem. So let's look at chamomile, because now you will read, you will know that you'll just think there's no deficiency. Just read it. The company's year end is 31st July 2005. It is July 2005, 2015, 2025, whatever you want to call it. You are the audit supervisor reviewing the internal controls documentation in relation to the cash receipts and payments. Okay, you are the auditor basically. The company has a small internal audit department based at head office. Okay, it doesn't really mention that they are understaffed or anything. It just says they are small. It's okay, maybe it's a small company. So let's not take that as a deficiency. If it says that it's understaffed, it does not have enough people, it does not have enough resources, does not have enough money, then that's a deficiency. The purchase department based at the company's head office is responsible for ordering food and beverages for all 6 venues. Okay. In addition, each venue has a petty cash float of $400 held in the safe, which is used for purchase of sundry items. When making purchases of sundries, employees are required to obtain the funds from the restaurant manager. Now, this would be a deficiency. It's not a deficiency, but it would be a deficiency if employees can directly take the cash out. But they can't do that here. They need to obtain funds from the manager, purchase the sundries, and return any excess money and the receipt to the manager. So even the bill needs to be given. Imagine if the question said that no receipt needs to be given to the manager, that would be another deficiency. At any time, the petty cash sum held and receipts should equal the float of $400, but as we noted by the company's internal audit department, that on some occasions that has not been the case, which means this is a deficiency. At all times, we need to maintain the float of $400 for petty cash. But that has not been the case in some situations. That could indicate that there has been some theft. Right? The float of $400 not being maintained at times could indicate misappropriation. Guys, apologies for the murder of the spelling. Okay, now it's correct. Right? So this is a problem. This is a deficiency. The problem is that there's nobody correcting it or nobody looking into it. Okay. Each venue has 5 cash tills, okay, to take payment from customers. 3 are located in the bar area and 2 in the restaurant area. Customers can pay using either cash or a credit card, and for any transaction, either the credit card vouchers or cash are placed in the till by the employee operating the till. To speed up the payment process, each venue has a specific log code which can be used to access all 5 tills and is changed every 2 weeks. Now, again, as I said, chamomile is not as easy as the other 2 questions. But think about it. There are 5 tills, and you can use any of those tills. You, as in the customer, can use any of those tills to make payments. Now, there's a specific logon code which can be used to access all 5 tills, which basically means that to make a payment, there can be a code, and that code is same for all the 5 tills. Which means that if any mistake was made, because the code is the same for all the 5 tills, you will not know which till had the mistake and which staff you should hold accountable, because the code is the same for all the 5 tills. So where the mistake is, you will not know.